Right, hi everyone. Welcome to today's webinar brought to you by IronFX, where we'll be having the live trading session. Right, before we begin today's webinar, right, do not hesitate to drop your questions in the chat box here, as well as any analysis requests for any of the instruments as we progress through today's webinar. Right, okay, before we start, please take note of the disclaimer and the risk warning, right? The information is not considered as investment advice or an investment recommendation, but instead is just marketing communication. And so take note that the products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. Right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, let's take a quick look at what's on the economic calendar for this week. Right, there's quite a few things going on, right? Even though we are in the final 2 trading days of the week, right? There's quite a few things going on over the next couple of days, right? Coming up later today, right? On Thursday, 23rd of January, we have US unemployment claims that will be released. And later on, we also have a speech by President Donald Trump at the WEF, right? And tomorrow is a big one. Right, tomorrow is a big one. We've got a major central bank announcement, specifically the Bank of Japan releasing its monetary policy statement, as well as the press conference by Governor Kazuo Ueda. And later on, right, during the European and American trading hours, we will also receive flash PMI reports. Now, this is the calendar from Forex Factory, and the time listed here is in GMT time. So later on today, right, we from the US, we have unemployment claims being released at 1:30 p.m. GMT time. And then at 4 p.m. GMT, President Trump will deliver his speech at the WEF via a satellite link. Now, and then, of course, tomorrow, Friday, 24th of January, the Bank of Japan will release its monetary policy statement, followed by the press conference by Governor Kazuo Ueda. As usual, right, the Bank of Japan doesn't specify the exact time that the statement will be released and the exact time of the commencement of the press conference. They like to keep everyone guessing. But typically, from past experiences, the statement is released at around 4 and 5 a.m. GMT, right? It's typically released around 4 and 5 a.m. GMT time. And the press conference usually follows suit 2 to 3 hours after the statement is released. So take note, there's no specific timing for the announcement of the press statement or the policy statement, but typically we can expect it to hit the news at around and between 4 and 5 a.m. GMT time. And the press conference usually starts 2 to 3 hours after that. Right, then moving on into the latter half of the day, right, we have flash PMI data, right, for the manufacturing services sectors for the wider Euro area. For France first, followed by Germany, and then by the wider Euro area, and that's at 9 a.m. GMT time. And then later on, at about 9:30 a.m. GMT, we also have PMI data for the UK. And finally, at 2:45 p.m. GMT time, we have the flash PMI data for the US. We're taking a slightly closer look at US unemployment claims. Now, this is a metric that tracks the number of Americans filing for unemployment benefits. Right. So generally, and this figure, this data point is released on a weekly basis and can function as a near-term catalyst for the US dollar. Now, when we see claims rising steadily, as what we saw from April till July of last year, right? Rising claims such as this period here typically signal some weakness in the state of the US labor market, and then usually that translates to a weaker US dollar, right? So typically, when you see claims are rising for over a prolonged period of time, right? Rising claims usually equate to a weaker dollar. Right, it functions as a bearish catalyst for the dollar. Now, what has happened over the last few weeks, we saw claims actually tapering off, right, after spiking significantly higher in middle of November, right? This was partly due to the hurricanes that had hit US, right? And also like the strikes at Boeing, right? Combination of the strikes at Boeing strikes and hurricanes hitting the US, right? That's why we saw unemployment claims spike in mid-November. However, since then, claims have tapered off very significantly, falling for about 5 consecutive weeks. So typically when claims are falling and coming in lower than the forecast, that typically signals a strengthening labor market and usually functions as a bullish catalyst for the US dollar. So now we can see here last week, unemployment claims spiked higher, jumping to 217,000. And for this week's forecast or today's forecast, right, we can see claims continuing to rise higher with a forecast of 221,000. So what we can expect is a second consecutive week of higher claims. And should we see a figure that's going to be higher than the forecast of 221,000, this is typically going to function as a bearish catalyst for the dollar. So to keep a close eye out for this data point, because as you can see here, it is a high impact data point that's going to be released at 1:30 p.m. GMT, and it has a pretty significant near-term impact on the direction of the US dollar. So if we do see claims coming in higher than 221,000, this is quite likely going to function as a bearish catalyst for the US dollar. So take note of that. All right, now let's move on over to the charts and trading view and begin our analysis. Of course, we'll start off with the dollar index, work our way through some of the major currency pairs, especially the dollar yen, right? Remember, we've got the Bank of Japan coming up tomorrow, so we'll definitely be covering the dollar yen. And then we'll head on over to the commodities and the indices, and of course, any other instruments that you would like to see, right? Do not wait till the end to drop your requests in the chat box. Do drop them in early, so we have time to go through the analysis together. All right. So with that, let's start the analysis on the dollar index, of course, starting on the daily time frame. Now we can see here, the dollar index has been in a strong bullish uptrend since the end of September, right? Hitting a high of 110.17 on Monday, 13th of January. This bullish move is pretty large. I think it's as large as 10%, right? If you look at it from trough to peak, yep, dollar index has risen 10%, gaining about 10,000 pips over this process. A very huge bullish uptrend here, and it still looks to be in place, right? Let me see. There was a pretty decent bullish channel prior to last week, right? There's a pretty decent bullish channel that was identified prior to last week, but you can see here now, dollar index breaking out of this bullish channel on Monday, 20th of January, right? You can see it breaking out this bullish channel here. But I just wanted to highlight this channel to show you that this was a very strong uptrend that had been in place since the end of September 2024. Now, of course, with dollar index breaking out of this bullish channel, clearly it is no longer valid, so we're going to get rid of it. However, where I see the dollar index has stabilized this week, right? We can see it has stabilized at around 107.80. And this looks like to be a pretty decent support level, right? And when I look at this swing high that is, when I look at this swing high that has taken place here on Monday, 25th of November, right? This level now can potentially function as a pullback support. Remember, prior resistances such as this swing high that had taken place in November of last year can now potentially function as a pullback support. So that's how I've identified the first support for the dollar index, and that's going to be at this pullback level at 107.49. Now, in terms of resistance, right, first resistance is simply going to be close to the swing high that was formed on Monday, 13th of January, and that's at 109.64. Right, and then looking a little bit below, right, in terms of the second support on the daily time frame, right, I would probably see a nice overlap level, right? It's a pretty decent overlap level at around 105.44, right? You can see resistance here, dollar index running to resistance on Wednesday, 6th of November, after which it proceeded to find support here on Friday, 6th of December as well. So it looks to be a pretty decent overlap, which I will identify as the second support. Now we can also run a nice Fibonacci retracement starting from this swing low here on 27th of September. Of course, going up to the high on 13th of Jan. Let's take a look at all the fibs. Right, we can see that the 23.6% retracement sits pretty close to the first support, right? And you can see here dollar index bouncing off the 23.6% retracement on yesterday, Wednesday, 22nd of Jan, right? Pretty nice retracement here. All right, and then we can see 30 and 50. Okay, 50 sits pretty close to the second support, so we can keep 50%. So that means we will just use the 23 and 50% retracement levels in our analysis. Now, beyond this first resistance here at 109.64, what could be the next potential resistance for the dollar index, right? For that, we're going to have to zoom out a little bit and look at how this index was trading back in November of 2022, right? Quite a while back. Now, when I look across the market structure here during this period, I see a pretty decent overlap level at 107.75, right? You can see support here on September 2022, support once again in October 2022, and then resistance here in November, right? So this looks like to be a pretty decent overlap that we can identify as the second resistance. Right now, what this support area also tells us is, right, it seems like the dollar index has stabilized at around a 23.6% Fibonacci retracement, and there's a potential opportunity to play a bullish bounce here, right? But take note, because we have the unemployment claims coming up later today at 1:30 p.m. GMT time, if we see a much higher set of figures, that could function as a near-term bearish catalyst. So that means we could potentially see the dollar index pull back towards the first support, giving us a potential better entry to go long on this index. So take note, right? Even though the catalyst, the unemployment claims later on may function as a bearish catalyst, it's going to be a near-term bearish catalyst. It actually may help us identify a better entry, or it may help us give us a better opportunity for an entry position to go long on the dollar index. Now, should that bullish bounce materialize, right, we're going to be identifying a couple of take profit targets, right? And I'll identify where we can identify those take profit targets on the 4-hour time frame. But otherwise, on the daily time frame, these are the key support and resistances for the dollar index. Now let's switch on over to the 4-hour time frame and fine-tune the analysis. Right, as we head on down to a lower time frame, it may be necessary to adjust the levels. So in this case here, for resistance, we're going to bring it up to the body of the candle here on Monday, 13th of Jan. In terms of first support, right, we'll just adjust it a little bit as well. Bring it up here. There's a nice overlap now. And for the second support, I think second support is fine. Not much to adjust for that. Right. Now we can see here on the 4-hour time frame, dollar index stabilizing around the 23.6% Fibonacci retracement yesterday, Wednesday, 22nd of Jan. However, when you look at this downtrend here, it's still in a pretty strong downtrend, right? And I would just like to point out, okay, this is not the best descending trend line, but nevertheless, I would like to point this descending trend line as well, because any clean break above this descending trend line is going to give us further conviction that the bullish bounce is playing out quite nicely. But for now, this descending trend line could also function as an area of resistance here for the dollar index. And while this support level here might help us identify a nice buy opportunity. Now, with regards to the stop loss, right, because this is a nice overlap support at 107.59, right, we're not going to place the stop loss at exactly the support level, right? We'll give ourselves about a 15 pip buffer, right? And in that case, we'll place the stop loss at 107.45, right? Give yourself about a 10 to 15 pip buffer underneath a major support area when identifying a suitable stop loss. So in this situation, right, we're looking for the dollar index to pull back towards the first support, which is around 107.60. And if it does stabilize around here, it helps us identify a good opportunity to go long on the dollar index. With the stop loss identified underneath this major overlap, we give ourselves a 15 pip buffer and place the stop loss at 107.45. Now, should that bullish bounce materialize, and if this descending trend line gets taken out, that gives us a little bit more conviction that this bounce is playing out quite nicely. Now, how will we identify the potential take profit targets along the way, right? We can see there's a huge gap here, right, on the dollar index. On Friday, 17th of Jan, it closed at around 109.40. And then on Tuesday, it opened up on Tuesday, 21st of Jan, it opened up at 107.90. It dropped about 50 pips, right? Nearly 50 pips there. Remember, Monday, US markets were closed, right? US financial markets were closed in observance of Martin Luther King Jr. Day. So that's why the dollar index was not trading on that date. That's why you see for this week, the opening candle is on Tuesday, 21st of Jan, right? Now, zooming in a little bit closer, right? So take note, we're looking to identify now several take profit targets should we see this bullish bounce materialize. So what I see here, right, there's a pretty decent pullback level here, support level here. Right, we can see dollar index bouncing off this level at 108.95 several times before finally gapping lower. This can be a potential take profit target, right? This can be identified as the first potential take profit target at 108.95, and then a little bit higher up, There's probably I see another overlap here. Now, why is this a nice overlap, right? There's a swing, nice swing high resistance taking place here on 2nd of Jan, after which this level proceeded to consolidate here on 14th of Jan, right? Finding a little bit of support before finally dropping lower. So this is creates a nice overlap level, which we can use in the identification of a potential resistance barrier as well. So that means, right, we've identified the first take profit target at around 108.95, with the second take profit target identified at 109.53. And of course, if the dollar index continues to climb higher, right, we're going to be targeting the first resistance as the final take profit target should that bullish bounce materialize. Now, on this downtrend here, we can also run a Fibonacci retracement, right, starting from this swing high, 13th of Jan, down to this swing low here on the 22nd of Jan, right? We can already see that the 50% retracement aligns very well with this intermediate resistance at 108.95. Let's see if there's another retracement that aligns with this overlaps higher up. Let's take a look at all the fibs. And we can see, okay, 78.6% sits just above this level here. So that's fine. Let's keep 50 and 78.6%. And then we'll highlight this area as a resistance zone here, right? The overlap resistance and the 78.6% retracement helps us identify a potential resistance zone. So once again, right, for the dollar index here, we have a potential bullish bounce opportunity, right? We have the unemployment claims that will be released later today at 1:30 p.m. GMT time. It is forecasted for claims to increase for the second week in a row. And if we see a strong high figure, right, that could potentially function as a near-term bearish catalyst for the dollar and push dollar index towards the first support at 107.59. Now, should it reach this level and stabilize around this zone, it helps us identify a buy opportunity for the dollar index looking to play a bullish bounce with the stop loss identified 15 pips below the major support, right? First support at 107.59 is a significant overlap level, and we give ourselves a little bit of a buffer, a 15 pip buffer below this support level here. That's why the stop loss is at 107.45. Buy entry, it would be identified at around 107.80. And once again, we'll be looking for the dollar index to clear this descending trend line, right? This is not the strongest descending trend line. However, I would still like to see price clear it to get further conviction that we really do have a nice bullish bounce playing out. And once it breaks above this descending trend line, right, we can identify a few take profit targets. First one is this pullback level at 108.95, which is accompanied by Fibonacci retracement at 50%. Second take profit target is an overlap level at 109.53, accompanied by a 78.6% Fibonacci retracement. And the third take profit target can be identified at 110, which is the swing high resistance here that has taken place on Monday, 13th of Jan. Right, so these are the key levels here on the dollar index on the 4-hour time frame with a potential bullish bounce opportunity that could play out maybe later on today or perhaps early tomorrow morning. All right, now with that, let's move on over to dollar yen. Right, as I mentioned, we've got the Bank of Japan coming up tomorrow. Right, this is going to be a huge announcement, right? And it's going to have a huge impact on the currency markets, right? Especially for all the currency pairs that involve the yen, right? Dollar yen is going to be one of them that's going to be significantly impacted. Of course, with all the other yen crosses as well. Pound yen, euro yen, of course, and Aussie yen, and so on and so forth. But let's keep our focus on the dollar yen. And let's see what are the opportunities for tomorrow. Right. With regards to the Bank of Japan, they are expected to increase their key policy rate tomorrow. The key policy rate for the Bank of Japan currently stands at around 0.25%, and they're looking to make a 25 basis point hike, bringing it up to 0.5%. So this potential rate hike could likely strengthen the yen, and if the yen strengthens, that means currency pairs like the dollar yen are likely to fall lower. And not only is the announcement going to be important. The press conference by Governor Kazuo Ueda is equally, or if not far more important than the press release itself, because his remarks and statements to the public, to the press, will have a huge impact on the direction of the yen, right? So if he comes out to be pretty hawkish, that means the yen could strengthen further, and then we could see dollar yen pull back even more. However, if he comes out and uh, if he presents himself to be much more neutral, right, that means the yen could weaken as well. So we could see we are definitely going to see a lot of volatility in between the release of the statement, as well as during the commencement, as well as once the press conference gets underway. Now we can probably see that dollar yen has been has been in a nice uptrend, right? Especially since 5th of December, very nice uptrend here, but it has pulled back last week, right? We have seen this currency pair pull back quite sharply since well, 2 Fridays ago, 10th of Jan, right? So very clearly we can identify a nice resistance here, right? When I look across this level, there's another swing high that has taken place here at 158.16 or 158.28. Nice swing high resistance taking place here on Friday, 26th of April. And this is where the dollar yen once again stalls. So it's important to identify prior significant resistances like this, because that means as the dollar index was reversing nicely, right, it made a nice bullish reversal here of 159, was rising strongly, breaking past prior resistance as well. This was a swing high resistance back in mid-November. It broke above this resistance, so that means as price was rising higher, we would have identified the first take profit target at this swing high resistance. And of course, if dollar yen continued to climb even further, we would have used this swing high resistance back in April of 2024 as the next potential take profit target, which is where indeed the dollar yen did stall, finally stalled, and reversed the drop lower. So that's why it's always important to identify significant resistance and support levels, because they help us identify exits and entries. Now, coming back to where the dollar yen is trading, right? It has broken below 156.49 and looks to be climbing up above this level once more. So this level here at 159 can be a potential, it's a key level to watch out for. However, when I look slightly below, let me see where is the better pullback. There is a nice pullback level that I see. Right, this level at 154.87, I would identify this as the first support here, right? We can see dollar yen stabilizing at this level, around this level on 15th of May, 4th of June, and then after that, it functioned as resistance here on 7th of November. And then in more recent times, it has found support of this level since mid-Jan. So you can see here, this is a pretty decent overlap level at 154.87, which I will identify as the first support. Now, this level here, right, at 156.49, right, is also a pretty decent overlap. And this is going to be more of a upside confirmation level, right, because we see dollar index rebounding nicely since Tuesday, right? And this level here is more of an upside confirmation. So that means if you can make a clean close above 100, clean close above 156.24 today, right? This actually yesterday's candle has already closed above this overlap resistance, right? So we have a potential it gives us more confidence that this reversal here could have a bit more ground to gain, right? So we may see this dollar yen rise up higher for today, but tomorrow, right? Tomorrow is going to be a whole new ball game, right? Some of these resistance levels may still be in place, but if we do see dollar yen rise higher overnight and stall around the first resistance, right? And we see a pretty strong hike and a strong statement, right, from the Bank of Japan. This may be an area where the dollar yen may make a potential bearish reversal. So take note, by the time we reach tomorrow's announcement, right, we could see dollar yen climb a little bit higher, maybe come close to the first resistance, maybe not exactly the first resistance, but come pretty close to it. And should we see a rate hike take place, this may be an area right at around 158 where we could see we may have a potential bearish reversal opportunity for the dollar yen. But for now, right, I would say the bias, at least over the next few hours, is to the upside, and we'll be looking to see if dollar yen can make a higher ground. Now, of course, along the way, we're going to be identifying a few more intermediate resistance levels, but we'll do that on the 4-hour time frame. Now, on this uptrend here, okay, maybe first on this downtrend, I would like to run a Fibonacci retracement from this swing high on 3rd of July going down to the swing low here on 16th of September. Right, we can see the dollar yen has surpassed all the key retracement levels, so that's fine. Let's get rid of this retracement. It's no longer valid. But we can run a retracement from this swing low, 3rd of December, going up to this high here on the 10th of Jan. That may be the 38.2% retracement that we could use. Actually, let's pull up all the fibs first. Right, we can see 38.2% retracement aligns very well with the overlap, support at 154.87. And looking a little bit below, I see another pretty good overlap as well. Right, pretty good overlap here at 151.60. Or is there another one in between? No, this level is not too. Okay, perhaps. Okay, I think this level here might be a slightly better one at 151.60. This is where I would identify the second support, but I would like to highlight this as a zone alongside the 61.8% retracement. So on this uptrend, we're going to be using the 38 and 61.8% Fibonacci retracements. And for the second support, we're going to be highlighting this as a zone over here. Now, what this also means is, should we see a potential bearish reversal play out tomorrow and the dollar yen really starts to fall sharply, we're going to be using the first support and the second and the 61.8% Fibonacci retracements as potential take profit targets. So take note, if these support levels are still valid when the central bank announcement takes place, right, and we see a bearish reversal for the dollar yen and this currency pair starts to fall sharply, we can then use the first support at 154.87, right? It's an overlap support accompanied by Fibonacci retracement 38.2% as the first potential take profit target. And of course, if this currency pair continues to fall lower, we're going to be using the 61.8% Fibonacci retracement as the next potential take profit target. In fact, I think if I pull up the 50%, 50 might have some use as well. Then you can use the 50% as well to identify the next one. So there's a couple of targets that we can identify for the short trade, right? First of all, of course, it's going to be the first support at 154.87. Then if it continues to fall lower, we can target 50% retracement. And if it continues to drop even lower, and then the next one would be 61.8%. Now, on this uptrend here, that begins from 16th of September, I think there's a pretty decent, yes, ascending trend line as well. This ascending trend line is going to be pretty important, and so please take note of it. Right, so if we do see any bearish reversal take place tomorrow, and especially if it makes a clean break through this ascending trend line, that would give us further conviction that there's a strong bearish reversal that could take place. Right, remember this ascending trend line has been in place since mid-September of last year, right? You can see here very clearly in early December 2024, dollar yen stabilizing around this level before reversing to make a bullish bounce. And more recently, right, on Tuesday, 21st of Jan, this is once again where it found support. You can see that it found support at the intersection of the ascending trend line and the overlap support, right? And we also have the presence of a 38.2% Fibonacci retracement, highlighting a strong support zone. Nevertheless, come tomorrow, if that rate hike takes place by the Bank of Japan and we see a pretty hawkish press conference, we could actually see the yen strengthen. And if the yen strengthens, that means currency pairs like the dollar yen, pound yen, euro yen are likely to reverse and fall lower. And if it falls lower, we can then use the 50%, 61.8% retracement, second support as potential take profit targets for the short trade. Now let's move on over to the 4-hour time frame and see if there's a need to fine-tune the analysis. No, I think it's pretty fine. Right, remember, I think the bearish reversal was could take place tomorrow, right? Maybe for now, right? It looks to be still in a nice uptrend. Dollar yen still needs to be on a nice uptrend. Remember, what would give us more confidence that that bearish reversal is going to take place, right, is when this ascending trend line gives way, right? This is a very critical ascending trend line. And if it does give way, right, it gives us further confidence that this currency pair can drop lower. Something like this ascending trend line here. This is not the cleanest ascending trend line right here. If you look at this here in, let me just zoom in a bit. Right, from 8th of October last year till 21st of November, right? This was a pretty critical ascending trend line, which dollar yen had respected. You can see it bounced off this trend line several times, but when it finally broke through it or broke below this ascending trend line, a nice clean break here on 25th and 26th of November, that's when this currency pair really gave way and we saw the downside accelerate very strongly. So similar concept here. I would like to see this critical ascending trend line give way before it gives us further conviction that we could really have a stronger downward move for the dollar yen. All right, okay, so that's for the dollar yen. Okay, then let's look 4-hour time frame. I don't think there's much to identify here on the daily, on the 4-hour time frame. If anything, I will be running a Fibonacci retracement from here. This swing high on 10th of Jan, going down to the low of yesterday, 21st Jan. Let's look at all the fibs. All right, looking at all the fibs. Right, because dollar yen looks to be stalling close to the 50% here, right? Maybe 50 and 60% is something that I would like to keep an eye on. Right, 50 and 60% retracements. This zone is something that I would like to keep an eye on here. Right, this could be a near-term resistance barrier as well, right? Take note, this could be a near-term resistance barrier, especially today, right? Especially today, Thursday, 23rd of Jan. Dollar yen came pretty close to the 50% retracement, but looks to have been rejected around this level, especially on this candle here. So take note, this is a pretty decent barrier as well. But looking at this descending trend line on the 4-hour time frame, right, it has actually made a bullish break above the descending trend line here, right? There was a nice, pretty decent descending trend line that had been in place for the dollar yen as it made this downtrend, or as it made this pullback from 10th of Jan. But it looks like as of yesterday, it has made a nice bullish break above this level. So typically in a scenario like this upside confirmation level at 156.25, right, which is an overlap support now, alongside with this descending trend line, can be an area of support as well, near-term area of support on the 4-hour time frame. All right, so these are the key levels here for dollar yen on the 4-hour time frame, daily time frame. Right now, let's move on over to the commodities, starting with gold. Right, and of course, we've reached the halfway mark. So, right, if you have any other requests, if you have any requests for any other instruments, do drop them in the chat box now, so we have sufficient time to go through it together. Otherwise, I'll be covering gold and oil, and then we'll wrap things up with the indices. Right. Okay, looking at gold, right? Gold has has been in a nice uptrend here since 20th of December, right? Breaking above a prior resistance, right? This was a pretty key resistance barrier at $2,718, right? We can see here, this was a nice overlap, previously functioning as support on 24th of October, functioning as a swing high resistance on 25th of November, and a swing high resistance once more on the 12th of December. And as recently as this year, you can see gold prices running the resistance on 16 and 17 of Jan last week. But after making this bullish breakout on Tuesday, this overlap resistance can now potentially function as a support area. So that's how the first support for spot gold has been identified as at $2,718 per ounce here. Now, very clearly, the first resistance for gold is going to be the swing high here that has taken place on 31st of October. Right, this is the intraday all-time high for gold that was formed on 30th of October, 31st of October, 22 at $2,790 per ounce. So very clearly, first resistance is at this swing high at 2,787. Now, with current candle pulling back, right? With the current candle pulling back. All right, hi Cleon. Okay, yes, we'll be covering crude oil after this, and then we'll cover the Kiwi as well. All right, so once we're done with the commodities, we'll jump to Kiwi, and if there's time, we'll go on to the indices. All right, great to see the requests come in. Right, okay, so now with today's candle in the red, right, oil, gold prices are pulling back. We can also run a Fibonacci retracement from this swing low on 19th of December, going up to this swing high on the 22nd of Jan. Looking at all the fibs, we can see that the 23.6% retracement aligns very well with the first support. And then when I look a little bit below, right, I see another nice overlap where the 38.2% retracement sits. So this is another nice overlap at 2,689, which we can identify as the second support here. Right, so we'll keep 23 and 30 in the analysis. And when we zoom in, right, we can see here gold prices running the resistance on Friday, 10th of January. And then once the bullish breakout took place on last Thursday, we can see that at the beginning of this week, gold prices bounced off this level once more to create a nice overlap level. And so this is how we've identified the second support. It's an overlap level accompanied by a 38.2% Fibonacci retracement. Now on this uptrend here, right, I can even identify a nice bullish channel, right? It's a nice bullish channel with gold prices bouncing off the lower trend line a couple of times and hitting the upper trend line once or twice as well, right? So we can also identify a nice bullish channel for this commodity here. Now, after making this breakout here, right, the first support can function as a potential opportunity, buy opportunity as well. So we may have a potential bullish bounce for spot gold should it retrace back towards $2,720 per ounce. And if you can stabilize around this level, right, it helps us identify a pretty good buy opportunity. Conversely, at the same time, if you've shorted gold as of today, right, if you shorted gold as of today, right, identifying your take profit target close to $2,720 is a suitable area to do so for any short trades that you may have, right? So it's important to identify the support and resistances because they can be used in turn as take profit targets as well as buy opportunities as well, or entry opportunities. Now, let's go on over to the 4-hour time frame and see if there's a need to fine-tune the analysis. I think first support is pretty clear, not much to do. Second support is also clear as well, right? It's a nice overlap, right? There's not much else to do here. Yep. So with gold pulling back quite strongly based on the current 4-hour candle, right? And if you have shorted gold here, right? Because yeah, there's a if you look at the momentum indicators, right? The stochastic oscillator and the RSI, these are momentum indicators. And when both of them are at the upper thresholds, right, especially with stochastic oscillator hitting 98, RSI hitting around 71, 73, 75, right? Typically, when you see these two momentum indicators line up as such, it indicates a potential overbought conditions. And overbought conditions typically mean that we have an impending bearish reversal on hand. And that's what looks to have played out quite nicely, right? We see a bearish reversal taking place, similar to the technical setup that we see here on 16th of Jan as well. Remember, I'm on the 4-hour time frame now. On 16th of Jan, 4-hour time frame, stochastic oscillator hitting around 90, RSI climbing as high as 72. We did see gold prices stall at the prior swing high resistance. Remember, $2,718 was a very significant overlap resistance. And this is where it stalled back on 16th of Jan. And at the same time, we had the momentum indicators highlight a potential overbought condition. Overbought condition means typically we can expect an impending bearish reversal, which has played out quite nicely here. And you can see as the bearish reversal took place, right? If gold prices stabilized at gold prices found support close to the lower trend line of the bullish channel. So once again, this bearish reversal is playing out quite nicely. And as gold approaches the 23.6% Fibonacci retracement, this is where you should be identifying your take profit target for the short trade. And of course, if price stabilizes around this level here, it gives us an opportunity to go long once again, right? You can see here price bouncing off, stabilizing, and then gives us an opportunity to go long. And also what is key here on this 4-hour chart, you can see here, there is a descending trend line that was in place. And then once price makes the bounce of this overlap here at $2,690 per ounce, and then it makes the bullish break above the descending trend line, we get more confidence and conviction that this uptrend is likely to continue. So that's what has happened. Now we're seeing something similar play out. Bearish reversal takes place. Uh, Gold prices could drop all the way down towards the first support, and then once again, right on this 4-hour candle, on this right, we have another descending trend line. And then should we see price stabilize around the first support, it gives us an opportunity to identify a potential bounce. And then, of course, once and if it breaks above this descending trend line, it gives us a little bit more conviction that gold has more room to run, right? So these are the key levels here for gold on a daily and 4-hour time frame. Let's cover oil, WTI oil. Then we'll cover the Kiwi. Now, looking at oil, right? Daily time frame once again, crude prices rose very strongly in the second week of Jan as the outgoing Biden administration placed newly imposed sanctions on Russian oil and gasoline exports. So this is why in the second week of Jan we saw a very strong bullish breakout for crude oil prices. But as soon as President Trump took office, right, his swearing-in ceremony earlier this week, he announced a plan to expand U.S. oil and gas production, right? He wants the U.S. to be completely or as much energy independent as possible. And he announced a new plan to expand oil and gas production and operations in the US. So that is why, since the beginning of this week, right, we've really seen crude oil prices accelerate to the downside here. So take note, earlier on in the second week of January, right, crude prices had received a strong bullish catalyst as the outgoing Biden administration imposed new sanctions on Russia's oil and gas exports, causing crude prices to spike. And then this week, Trump sort of has made the opposite call by announcing, or has made a call that has had the opposite effect by announcing a new plan to expand oil and gas operations in the US. Okay, so very clearly, where crude oil ran into resistance at around $79 per barrel, right, is going to be where the first resistance sits, right? In fact, when you zoom out, right, it is actually like a nice uh, overlap here, right? There's a nice multi-swing high, not overlap, but multi-swing high resistance, right? We can see resistance here as well. But of course, based on where price has currently reversed off, right? Where I would identify the first resistance now is going to be here at $78.93. It's actually pretty close to where the previous time WTI ran into resistance on 8th of October, right? Pretty close here. So you can see here, this is almost like a very nice multi-swing high resistance at around $79 per barrel. This is where I identified the first resistance. And it's falling towards, the next major support, right? The next major support that I see is the overlap level here, right? If I stretch it out, let me see. No, I think this is fine, right? There's a nice overlap level at $72.62. Maybe on the 4-hour time frame, we'll be able to identify an intermediate level. But for now, based on the daily time frame, right, this looks to be a pretty significant overlap at $72.62. I'll identify this first support for now, and we can also run a Fibonacci retracement starting from this swing low on 6th of December, going up to the swing high here on the 15th of Jan, looking at all the fibs. We can see crude prices has fallen through the 33.6% retracement. It's approaching the 38.2%, and we can see the overlap at 72.62 is accompanied by 50% as well. So let's keep 50% here and get rid of I'll keep 23 to 50 and get rid of the others. And highlight this as a zone. Right. Okay. So these are the key levels here on the daily time frame, but I'm sure there's something in between that we can identify. So let's move on over to the 4-hour time frame. Now on the 4-hour time frame, I see a nice pullback level here, close to the 38.2% retracement. So this is where we can also identify uh, the support level. So on the 4-hour time frame, where the 30 close to where the 38.2% retracement sits, I would identify my first support here, and then my second support would be at 72.62. Right, as we switch over to the 4-hour time frame, right, we'll probably need to adjust or fine tune the analysis, so that's fine, right? And adjust this here as well. So all right, so so with crude oil prices falling sharply, right, there was no other major support level that we could identify. Oh, there's a gap here, right? There's a gap here. It seems like, okay, let's put this on for now. Let's see, is this where, right? It looks like there's, okay, we can see here for once again, right? Just to recap, this gap here occurred in mid-October last year, and it looks to be a level where the dollar index, oh, sorry, WTI oil has stabilized once again, right? It looks to have stabilized around this level here. And if you've been shorting crude oil since the beginning of the week, or perhaps even since the end of last week, right? Identifying your take profit target at around $75 per barrel is a suitable area to do so. And you can see here, this is a nice downtrend. And also I would highlight this descending trend line as well. You can see this descending trend line has been respected. Crude oil hitting this descending trend line several times and reversing off it to drop lower. So based on this current candle, it looks to have run into resistance once more and looks to be reversing down lower. So that means the downtrend looks to be still intact. So that means we can target, if you're short on WTI oil, you can target close to $75 per barrel, right, as a potential take profit target area here. Right, and remember, a clean break above this descending trend line may signal a shift in momentum. Right, currently, right, since last Wednesday, crude oil has been in a strong downtrend, but a clean break above this level here may signal a shift in momentum, and we could see prices sort of stabilize and maybe move a little bit higher. But for now, the trend is the strength is to the downside here, and we should be targeting close to the 38.2% retracement as a potential take profit target for WTI oil. All right, now let's move on over to the Kiwi. Once again, starting on daily time frame. And of course, if the dollar index has been rising strongly since the end of September, naturally the Kiwi is going to be moving in the opposite direction. We can probably identify a nice channel as well, right? Okay, there was, I would say, a very nice bearish channel, but it looks like that bearish channel has now been broken. But if you look at it, this is a pretty good bearish channel, uh, where the lower and upper trend lines were respected several times. But it looks like now we have this bullish breakout take place. And let's see whether this level can hold again. Remember, the upper trend line once or previously functioned as resistance. And then when a breakout like this takes place, a bullish breakout like this takes place, this upper trend line can now potentially function as a support zone as well. So take note that we could see, if price stabilizes here around here, which is around 56.20, we could see this uptrend resume. Okay, but first of all, let's identify key support areas. If we look at the Kiwi, right, the last time it was trading around 55.50 was back in October of 2022. So let's come back here. You can see this is a very significant swing low taking place here, right? Market structure shows us a very significant swing low taking place. So that means there's a very strong support area here, right? Maybe I would, let's just put this on here for now and see whether is it where the Kiwi stabilize exactly. Yep, you can see here, right on point, Friday 10th of Jan and Monday 13th of Jan. The Kiwi stabilizes at 55.55 and retraces higher. You can see here, that is why it is always important to identify significant swing lows and swing highs, right? Because they really help us identify support areas and resistances. So that means when the Kiwi was falling, right? And we zoomed out and we identified this major swing low here. We would have targeted, or we would have identified our take profit target at around 55.55 for the short trade here. So that's why it is very important to start the analysis on a higher time frame, such as the 4-hour time frame or daily time frame, to really identify the significant support and resistance areas. Like even this here, right? This was a significant swing low that was formed in April of 2024. And once again, as prices were crashing, right, for the Kiwi in mid-July, this is where the Kiwi stabilized once more. So that means this short trade here, the take profit target would have been identified close to this swing low here. And this is where pretty much exactly it stabilized and made a very strong bullish bounce. Similarly here, this is a strong support level. So as price was approaching here, you can see here, Kiwi bouncing off this level very nicely once again, retraces higher and makes a second attempt, and this time it actually breaks through this level. So you can see here, this significant swing lows and swing highs really function as major barriers. You can see a first swing high here, second here, and this third one here as well. So that means when price was rising strongly, right, this would have been an area where we would have been looking to exit the long trades, right? You definitely wouldn't be looking to go long around this level here, right? The chances are it's quite likely it's going to move in the opposite direction. All right, so coming back to the Kiwi on the first support. The first support is here. Again, I think beyond the first support, wow, this is a bit scary, right? Let's see where, right, the next major swing low. Next major swing takes place back, I believe, should be the COVID lows. That's right, there we go, 19th of March. So this is when second major support for the Kiwi sits at. So you can see there's a long way to go. And then in terms of resistances, prior levels can also be resistance. Let me see. Yep, this is a pretty good resistance here as well. Not sure this is going to be the first or second resistance, right? You can see a overlap here, very nice overlap being formed. And is there anything here? I see a pretty decent overlap around 56.80 as well. Let me see if this is something that we can use. Yep, there we go, right? You can see very nicely here, bit of consolidation at, at around 56.80. And it's also at a place or at a level where the Kiwi has stalled several times. And you can see it stalling here on 6th of Jan, 7th of Jan, and it looks to have stalled once again from the beginning of this week as well. So you can see very clearly, this is a pretty significant overlap at 56.81, which will identify the first resistance, and higher up, 57.68 is going to be the second resistance. Now, with prices reversing of this level here, right, there's a bearish reversal in play, and bearish reversal in play. So that means we will be looking to identify a potential take profit target, right, close to where the upper trend line of the bearish channel used to sit, right? And at the same time, now let's move on over to the 4-hour time frame. You can see here, there's a nice uptrend. Let me see, probably from here as well. Okay, although this part here, I'm not so inclined to use the Fibonacci retracement between these 2 points. As you can see here, the trend line doesn't capture the market structure very well. There's actually a big retracement that takes place between 15th of Jan till 19th of Jan. I'm more inclined to use the retracement from here, 17th of Jan till the 20th, because you can see the trend line captures the market structure very well. And in this case here, I actually see a pretty good support area. A swing low support at about 50% retracement. Let me see, let's put it all on. Okay, let's just keep 50. Right, so I would identify, so with this bearish reversal taking place, I would identify my first take profit target at around the 50% Fibonacci retracement, right? This is for a short trade. And for the next one, the next take profit target, there's another pretty decent overlap as well at 59, 55, 90. Is there 70% here? 78.6%. Let me see. Yep, there is a 78.6% retracement. So we can see here, there's a nice swing low taking place here on 21st of Jan, accompanied by 50% retracement and a pretty decent overlap at 55.90, accompanied by a 78.6% projection. So that means, right, this bearish reversal looks to have played out over, at the first resistance, and with price falling towards dropping lower, we'll be identifying the first take profit target at the 50% retracement. And of course, if this currency pair continues to fall even lower, we can then identify the second take profit target at around the 78.6%. All right. All right, great. Okay. Okay, before we continue, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar. And then if there's time, we can probably wrap up with one of the indices. Right, I'll keep the poll running for about I'll keep the poll running for another 30 seconds or so. All right. Wait to see all the responses come in. All right, thank you so much. All right, great. I think that's most of you who have voted. All right, okay, there's still responses coming in. All right, just keep it running a little bit longer. All right, great. Okay, thank you so much. All right, let's move on. Hang on, sorry. Okay, let's still got a little bit of time, so let's wrap things up with the US 500. Right, coming to the US 500 here. We start on the daily, and we can see that the previous intraday all-time high was formed on 6th of December, and that was at 6,099.70. And it looks like has it made a new intraday? Oh no, not yet. So the intraday high that was formed on 6th of Jan still currently stands. Right, you can see here this level still currently stands because this latest one here is at 6. Okay, just fractionally stands, right? You can see it came very close to this resistance barrier and then it's pulling back today. Right, you can see here. And so that's why it is always important to identify prior resistance barriers. As you can see here, this is where the take profit target for US 500 would have been identified as it made a very nice reversal, right? It made a very nice bullish reversal of this level here, right? This is a very strong support level. You can see several bounces taking place since 19th of November. That makes a nice bullish reversal. And of course, it also breaks out of a pretty important descending trend line, right? Once this breakout takes place, it gives us more conviction that this uptrend is likely to gain further traction, right? So let's now identify the key levels here. I would still like to keep this descending trend line on, right? As a reminder, right? You can see here, nice bullish breakout take place. And then in terms of support, right? Maybe there's almost like an overlap level here. I guess it's more like this. There's a nice overlap level here at 6,036. This is where I would identify the first support. And then a little bit below, there's a pullback level at around 5,977. This is where I would identify the second support. All right, okay. Now for right, hi Rahul. Okay. Well, I would say keep tuning in to the webinars brought to you by IronFX, right? Especially the live trading session. This is where you get a good hand good experience. I would say a good opportunity to learn firsthand in terms of technical analysis, right? In terms of books, right? There's not really any books that I would recommend, right? But I think if you join these sessions regularly, right? Whether it's the breaking news sessions or the live trading sessions, this is where you'll really get hands-on experience on how to improve your technical analysis, right? You can see that we are um, starting the analysis on a higher time frame, right? H4 daily time frame. We identify key support and resistance levels, and then after that, you can work your way down to the lower time frame. So you can drop down to the 130-minute time frame. But generally, as a guide, as a recommendation, I would say at least start the analysis on the H4 time frame or even the daily time frame, establish the key support and resistance levels, and then after that, work your way down. So I would recommend for you to tune in, right, into this session every week. Like this is where you really get a hands-on experience, first-hand experience on learning technical analysis, right? Because what we're doing here is something that, I believe no book can probably replicate, right? Okay, so here we go. Right, don't really have any books to recommend, but once again, do tune in to every session here because not only me, not only myself, but also my colleagues as well will be able to give you uh, first-hand experience here. Okay, so looking at support and resistances, so we see a nice bullish uptrend. So we can also run a Fibonacci retracement from this swing low 13th of Jan to this swing high here. Looking at all the fibs, you can see 2338 align well with the first and second supports. So let's keep that on. There we go. Right, and you can see here, since US 500 is trading close to the intraday high, where could we possibly identify the second resistance? In such a scenario like this, we would rely on Fibonacci tools such as extensions and projections. So let's see if we can find an extension. To find extensions, we're going to be running a retracement from here, this swing high on 6th of Jan, going down to the swing low on the 13th. Key extension levels sit at 127 and 161%. We can see here, as price was retracing higher, it made this bullish breakout through the descending trend line. Not only did we have the prior swing high resistance of December 2024, we also had a Fibonacci extension at 127%, identify a very strong resistance barrier. And we can see the 161% extension sitting at 6,170. So this is where the second resistance will be identified. So that means if we do see a bullish breakout takes place, right, we can identify the next take profit target close to the second resistance. All right, if you head on over to the IronFX's YouTube page, right, you should be able to catch the recorded webinars as well, right? So do head on over to the YouTube page for IronFX, where you can catch the past webinars as well. Let me see if we can quickly find that for you. Let me see this. Okay, I can't seem to find it, but okay, if you go on over to IronFX, let me see. Just let me do one last quick search if I'm able to find it. No, there we go. Right, okay, here we go, right? Found the link. Yeah, if you head on over to this YouTube link for IronFX, this is their official YouTube page. This is where all past webinars will be uploaded. So if you're unable to catch the session live, do head on over to this website here to catch all past webinars. All right, so that's all I've got for you guys today. Thanks everyone for tuning in. Right, take care, have a great trading week, and I'll catch you all at the next session. Right, hi Rahul, I've actually placed the link in the chat box, the webinar chat box, right? So do copy the link of that chat of this chat box here. All right, thanks everyone. Take care and have a great trading week.